In this video, we shall see some common mistakes you must avoid when investing in equity mutual funds. Welcome to FINDAS, a place where you can be financially bindas. This is Samir Machwe and I will help you create abundance in your life. If you are new here, I would like to inform you that we are doing this series of videos on common investor mistakes in equity mutual fund investing. Do subscribe to this channel if you want more videos related to financial management and similar topics. I have already published 4 videos in this series in the last few weeks. If you have not watched them, I recommend you do it as soon as is possible. I am sharing the links to all those videos in the description below. In this video, we shall see why any attempts to time the market fail. And let's start right now. It is an old saying in the stock market that buy low and sell high. Many investors try to do this in real life, that is to say, they try to time the market. This is probably one of the most difficult things to accomplish. It is only in the hindsight that we can think of perfectly timing the market. Our experience since the year 1999 tells us that most attempts to time the markets fail and lead to frustration as well as financial losses for the investor. Even the top investor in the world, Warren Buffett, does not try to time the market. Even after years of investing, most well-versed investors recommend not to time the markets. It is not by timing the market highs and lows that you make big money. Rather, great wealth is created by spending time in the market, by remaining invested at all times, both good and bad. Most rich people tell us that the process of investing has to be mechanical and automatic. Hence, if you want to create wealth through equity mutual funds, you don't need to be an expert. Neither you need to understand how the markets work. You only need one thing, that is self-discipline. Most human beings lack self-discipline and hence you need a system to compensate for that lack of self-discipline. The methodology of doing an SIP in an equity mutual fund does exactly that for all of us. It helps you invest regularly, keeps you invested at all times through the thick and the thin. It is mechanical and it is automatic. Doing an SIP and continuing it over the long term is like creating a money-making machine that is well-oiled and works on autopilot. I am myself using this method since the year 2005 on a very regular basis and earn a decent return on investment. Trying to time the market is complete waste of time and energy. If you think you can outsmart the markets, you are living in a fool's paradise. Most people who try to time the markets are in the business of proving themselves right rather than being in the business of wealth creation. I would rather prefer to be in the business of wealth creation myself. If you focus on long-term wealth creation, you actually don't need to see what the markets are doing. Just keep investing on a monthly basis, on a regular basis until you get bored. Getting bored in investing is very important. Once you get bored, investing over a period of years, invest even more. Suddenly you will find that you would have created much bigger wealth beyond your own imagination. This is the formula. There is no rocket science. It's a complete no-brainer and probably it is this simplicity that keeps most people away from following it. I hope better investment sense prevails for you and you ultimately create the wealth you deserve. Keep investing regularly and keep watching my videos regularly. If you want more such videos in future, don't forget to subscribe and hit the bell icon. Do follow us on Twitter, Facebook and Instagram. Thanks for watching and I'll see you next time.